This is Alan Bush with the Daily Financial Forecast for Thursday, January 5th. Starting out with the stock index futures, we did see a little pressure this morning. This linked to the ADP employment change report that did come in a bit on the weak side. So some initial weakness initially in the indices. However, we feel that stock index futures will probably recover and work higher later today. Also, some of the pressure was mitigated by the jobless claims report that came in at a 28,000 decline. That was near the lowest level since 1973. Longer term, we still feel that stock index futures will continue to advance. And even though the Fed is on track to raise interest rates this year, 1 or 2 times in our estimation, that a rate that high will not be sufficient or high enough to derail this bull market in the indices. So we are looking for continued gains, including new historical highs in all of the major stock index futures. Now moving over to the currencies, seeing the dollar index again under some pressure today. Weakness in the greenback due to efforts by the People's Bank of China to support their currency. So some very dramatic measures taken by China, causing the yuan to advance. They're trying to stem capital outflows from China. So this causing some pressure to come into the dollar index. Also, again, we are seeing the probabilities of a rate increase later this year diminishing just slightly, so that also undermining the dollar index to some degree. Longer term, still thinking that the main trend is higher for the dollar, since the Fed is still the only major central bank that is on track to raise interest rates this year. Also seeing the euro currency higher. Now we have seen inflation numbers this week. In fact, several reports all showing substantial increases and accelerating inflation in the eurozone. So that did help the euro currency to advance. Also, we had better news from the UK in their services sector industry, also supporting the British pound, and higher crude oil prices helping the commodity currencies, the Australian dollar and the Canadian dollar. Moving over to the interest rate futures markets, some strength today, primarily due to the ADP report coming in a bit on the weak side and the lessened probabilities of an early rate increase from the Fed. Also the probability of a May increase at 33%. Just yesterday it was at the 36% level. Still thinking though that the main trend is lower for the interest rate market, especially at the long end, as inflation increases, which would be a rather substantial negative influence on interest rate futures markets, especially the bonds. Since we are talking about inflation, and inflation very much in the news lately, we are starting to see the gold and silver markets perk up, and I think this is primarily due, in fact, almost entirely due to inflation numbers around the world starting to ramp up. So some breakouts to the upside in gold and silver. We do feel that inflation will be accelerating more than the consensus view due to commodity price inflation and wage inflation. So I think gold and silver will have a very good year to the upside, and I would trade both of those metals from the long side. So once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland, and good trading everyone.